Morning, morning, morning. This is now the second stream of the day. Had the normal stream at 4:30 Eastern, or 4:30 Pacific, 7:30 Eastern, and apparently I didn't hit go live hard enough, so. One sec. Special appearance by the cat today. A bit of a more top-down view of myself. I wanted my screen monitor a bit higher, so camera is a little off positioning-wise. So, yeah, that looks good. Little adjustment to me here. Make myself just a tad bigger. There we go, just a little adjustment. On the chart we got in front of us, Euro Yen. Oh, I gotta mute that. That's just my inbox. Let's see here. Mute that tab. There we go. We got bullish continuation here. If we go down to the DXY, that ain't looking so hot on the DXY. If we could pull it up for the day, we had some pretty killer trades here today. Yeah. Dollar came on down, rallied on up, and now it is going upside down and turning around. My expectation was for up and then some down. We hit our likely low for the day, and now we've hit this likely top spot for the day a few times in a row here. But we'll probably see some positive drift up for like maybe another 20 or so pips. Euro dollar also seeing a neat little rebound today. Hello, Princely. Nice to see you. Sip of tea. Yeah. So going long here, if I can re-illustrate the point, going long here, and then short at this peak in the distribution, with a stop probably right above here, and then taking it down back to the low, only to go long it again. Yeah, man. This was a pretty sweet setup. Long here, short here, and then at least an exit or another long. Like, this is pretty nutty. Also, FYI, we got Discord. We have our tentative risk on daily plan Discord chat. So after the stream today, after we go over all these economic events down on the calendar, once the calendar actually loads, Yeah, we got EIA data coming down the pipe here in about 10-ish minutes. Manufacturing production, wow. U.S. manufacturing did really well. Production year over year, but month over month did fantastic. Industrial production month over month also did fantastic. Wow. So manufacturing picked up some speed. That is good. That is quite good. Let's go to the watch list real quick. The Discord. Also, I got this. It's a piece of research from Wells Fargo, specifically on the UK, that they literally just released about within the last hour. And in it, check this out. As a result, we continue to view the pound as an underperformer over the medium term. We see the USD dollar, the pound dollar exchange rate falling to 126 or below by the first quarter of 2024, and recovering only very modestly to 129 by the end of next year. Well, that's enough research for right now, because I'm going to be reading this research again in just a moment. Let me get another sip here. Big ol' mug. Big ol' mug of tea. English Breakfast by Tetley. So the next chart on the watch list actually is pound dollar. And I did have this bullish continuation lined up here. And I think we'll be hitting that. Because there's probably a high somewhere up here. Yeah, there's your likely low. Right there in the first spot of the day. Oh, come on. Calculation timed out. Well, that's what happens when you try to load a lot of data. At least the new version of the indicator loads instantly. Look how quickly that version of the indicator loaded. And look, it's exactly the same thing. Oh, yeah. On, off, on. New version, old version. New version, old version. Same exact stuff, but it loads instantly. Good progress made on the development for the indicator. Well, if anyone who's watching, for the few people who are watching, if you want to give, if you're hanging out in the Discord and you want to join the chat, if you want to request a chart, that'd be the time. Because things get pretty straightforward from here, right? Following up here for probably the rest of the day. This $0 trade was also pretty straightforward. It certainly could have gone lower, right? It certainly could have gone lower. But it was effectively a fluke to, if you looked at these closing odds. Because the whole base of this is, where is it likely to close? It's like, well, anywhere around here is fair game. So your guess is as good as mine for going long here and taking it to a close, or going short here and taking it to a close. It's equal both ways. It's equal both ways. Alrighty. And now let's load up the new version. It gives exactly the same result. That's what I like to see. That's what I like to see. I like to see the work actually coming in and saying, yes, that works. Okay. New Zealand dollar. Also, I think hit a likely high and a low. The biggest mover right now is pound dollar. Pound dollar's moved about 50 pips to the upside. So good for that. That was a pretty good short. I would have wanted to see it go a little bit higher, right to that psych level. See? At the 60 cent level here on New Zealand dollar. And look at that, the peak for the day right here, right at that psych level. Yeah, it's almost like you can see which levels are actually useful with this indicator. And then this is actually where most of your lows come in for the day, so you can probably nibble your way in some longs here. Take that up, up, up. Exit. Nibble your way into some shorts if you even had enough time to get into the shorts. And it just whipsawed down so hard today. Aussie, I still have some net bearish expectations for the rest of the day, but I have these bullish expectations going out into the rest of the week. We have employment info coming out of Australia, and I read the Westpac outlooks quite frequently. And the Westpac outlooks have started to identify that the people in charge of Australia's economy, they're de-emphasizing the need for tighter or looser monetary policy. And same thing with the people at the RBA directly. Now the focus is on, okay, do we have enough production? Do we have enough productivity? How is employment and labor looking? How are wages? Is inflation continuing to go down? So long those things stay nominal, things should be pretty stable for a soft landing in Australia. And off good employment data, which is what this little label is, if we get good employment data out of Australia come tomorrow around the open, sure, Australia could certainly go up if we have a nice little positive surprise. Anyways, as far as ignoring all that stuff, the low came in here and the high came in here because you can see the peaks. There's your likely low right off the bat at the open. That's a good long. Here's your short. That's a good opportunity to go short right there at the peak where you have most of these probabilities here for where your tops come in. So you had the long, you had the short, and then yeah, you either are probably still holding on to this, or you got out again for a quick 30 pips or so. Keep it simple, keep it straightforward. Dollar yen's probably going higher, I think was my expectation. Yeah, higher. Into the end of the day. Up to around here. We could look at some weekly pivot probabilities and some monthly odds and whatnot. Technically, most dollar pairs are in a range. Yeah, right now, I mean, it depends. The movement of the dollar pairs is not being mostly controlled by dollar at the moment, I think. Because all the currencies are being now put into their order, as in outlooks and institutions are clearly coming out and saying, we do not think Great British Pound will do well vis-a-vis Wells Fargo. But people have been saying that for like the last few months, and I have streams going back. Oh, got a little bit of an itchy ear. I got streams going back to like Danske Bank outlooks saying, oh yeah, pound isn't going to do so hot, euro isn't going to do so hot. Man, Danske Bank must not be so happy with the performance here, because they were saying like all the way throughout this, all year long, they've been saying, we're going to go to parity, we're going to go to parity, we're going to go to parity, all the way over here. And then nothing. Whole lot of nothing, right? Anyways, low is likely in for the month on euro dollar. So the stream is titled Tentatively Risk On, and you can probably see the reason why is that there's still opportunity for bearish continuations. That's what this label here is. Once you start going below these peaks in your distribution of low returns, you're starting to deal with this whole zone right here. And you see how in the histogram that I got on this indicator, how the shape, like you get these peaks and then you get this like flat area, and then you have this gray low area. This is an area called that can be easily identified as uniformity. It's a technical statistical term, and not technical analysis technical. I'm saying it's a technical term used in the field of statistics, uniformity. This is just saying your odd of getting your low. Let's say if I could get the drawing out, your odds of getting your low here, or here, or here, or here, anywhere in this uniform spot are equivalent. It's like rolling a die. You know how rolling a die is like 1 in 6? Well, it just means you have an equal likelihood of getting any outcome. That's the definition of uniformity, at least in my own words. Equal likelihood, equal probability, or at least in this case, roughly the same probability. It's not exactly the same. Like the difference here is like 0.5%, maybe 1%. But when you're talking about that small of a difference, when you have some jumps that are like 5 or 10% with some of these peaks, it's like, yeah, this is definitely more uniform and a little less predictable than maybe buying lows at some of these peaks. Yeah. So with that all said and done, let's go ahead and, I was looking at some sub, and I'll just go ahead and pull this up real quick. Let's see here. So this is steady decline in US oil. We're getting EIA data here, and actually the EIA data literally just came out. So let's go check out US oil, see how that reacted, and then go to the calendar. I'll also hide the research real quick. So let's see here. EIA, crude oil imports change. So crude oil imports are down. Crude oil stock change surprise to the downside. They should send oil up. Yeah. All of the oil inventory is getting drained away. EIA gasoline production change went down. That's not great. That means gasoline could be a little more expensive. Okay. These aren't particularly hopeful EIA releases. Let's go ahead and read a little bit about. Okay. Let's see here. Today's data should be the start of that trend. If the IEA is correct in its recent oil market report with respect to the global oil market balance in the third quarter of 23, then we should start to see US oil inventories draw lower as a consequence. Wow, this was released almost 6 hours ago before this data was actually released. So, yeah. OPEC production calculated by OPEC. Yeah. OPEC production is down, down, down. That's not good. So, yeah. Real quick, I'm gonna actually I'll deal with posting this in the Discord sometime later. Again, if you want to hang out with me in the Discord, you can. I'll be hanging out in here for an hour or so after the stream, sharing some of this research that I found, and going over indicators, going over charts and strategies and the whatnot. Let's see here. Oh yeah, there was, I think, this report here. Yeah, G10FX returns. So this is an institution sub. And the main thing I want to draw attention to is this. Approaching point of favoring Australian dollar versus New Zealand and CAD. Yeah. Australia should also capture potential China stimulus, is the catalyst here. So, oh, sorry, I hid that. I'm looking at this. Now I can immediately hide it again. And let's go to the chart and look at Aussie. I mean, first off, this, if we go to a 2 hour here and look at the setup potentially for the day. Oh, yeah, no, this looks like the low's going to come in here. Low is not in for the day, I think. All right, with that out of the way, see how quick that trade plan was? So now let's check out the relative strength going on with Aussie CAD. It seems like this was a bullish play, but I kind of want to check this out on a weekly time frame. Also, I'm going to try hiding. Let's see. Yeah, the trading view is just lagging. I guess it's probably because of my stream, but yeah, check that out. Here was where most of your lows occurred for the week. And sure, you could take in a couple of nibble trades going long, or a couple of nibbles on the short side here at this peak in the distribution. I'll go ahead and hide those probability lines. Well, also, I can bump that up to 5,000 on the look back. And look how fast that indicator loads. There you go. So yeah, shifts it oh so slightly. So yeah, most of the time your low for the week shows up right around there. I think those were good buys. I think those were some good buys. And most of the time you get your short for the week up here or here. Wow, that was super straightforward. Taking some longs here, exiting right there for some of it, hoping that it comes up to there, and just setting the stop in profit in case the thing actually comes back down. Or flipping short here. If you're that confident in how we're going to move for the week, it's all good. It's all open for interpretation. And on the month, I still have bearish expectations going forward into the low for the month. Now, while I agree the Australian economy is probably going to perform better than the New Zealand or the Canadian economy or the Great British Pound economy, you know, the UK economy for that matter. I still see some short-term Aussie weakness ahead. How about this? Because we're on a daily time frame, let's see if there's any seasonal information we can get from this chart. So let's load this up. Oh, I don't know about you guys, but that looks like bearish seasonal expectations to me. Oh, crap. You know, guys, when I have stuff in the way, you know, send a message into the chat, because sometimes I forget to remove stuff. Let's see. Maybe I should stop using studio mode. Yeah, I'll just stop using studio mode. So now things should be like instantly turning on and off. All right, that all should work and be a-okay now. So yeah, bearish seasonal expectations. That's what I got here for the month on Aussie CAD. At least going into pretty much the end of the month. Or at least until the last week of August. So you see 28th of August here. So maybe there's an opportunity to buy a low for the month around here next week. So this indicator says, hey, if you're going to be buying a low, maybe sometime next week is a decent time to be buying lows on the month. Even if this indicator doesn't give perfect indication because it is using seasonal data, one thing that it can be a little bit more helpful in is figuring out when a month is likely to have its pivot moment. So if things are going down and you're following seasonal expectations, once you get into these sorts of zones where the down move stops, you go sideways for a few days and then back on up, it's like a little pivot in your price. Makes it a little easier to figure out, oh, maybe if I want to be bullish on this, I should maybe wait. Let's go ahead and do this on USD CAD. So this thing's still going up. It's put me in drawdown, which sucks. This is the likely top for the month. But I knew going into this, I was like, the best time really to be taking shorts here is like the 14th, 15th, 16th, these 3 days next week. So this is like Monday, Tuesday of next week. So maybe the top occurs sometime this week, Thursday, Friday, and it rolls over first half of next week. And then towards the end of next week, you see the fall through. Because if you look at the expected value of the next 4 trading days, what you end up with is positive expected value, which simply means if you take the median return, not average, because average will skew based off of very large or very small returns, average will skew you. So take the median. So the median bullish and the median bearish return. So what's the median return on bullish trading days? What's the median return on bearish trading days? And then put those two together and you get your median expected value. And that's what this is. So it's saying, hey, over like the next 4 some odd trading days, you can have some bullish expected value. So even though these candles, they look a bit funky, the expected value of these 4 candles ahead of us is positive. And then you look at the rest of the month, and the rest of the month is bearish, 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 except for 2 particular trading days. One of them is of particular interest because this 22nd trading day of the month, we have 21 years of data to do historical seasonal analysis on this pair. But the 22nd trading day of August has only occurred about 15 times. So we're missing some data on that trading day because that trading day doesn't always occur. Trading days are not like calendar days. Every calendar day occurs, but not every calendar day is a tradable day. And depending on the order of when weekends begin and start for the month, can change if the number of trading days you have in a month. So for the 22nd of August, 22nd trading day of August, when it does occur, because about 25% of the time it doesn't occur, when it does happen, 80% of the time that's a green trading day, 3% of the time it's a red trading day. And what lights up a little red flag here is that it's it doesn't like flash green at you. It's like got this little green hue to it. So it's not really that bullish. It's got a bit positive expected value. Even though the day 80% of the time is a green day, it's not like a phenomenal, blow up your account trying trading. It's just not that type of trading. Like the trading day that I can see in this indicator that has the most potential movement going forward starts in September 4th. That's the day with the largest net expected value, either positive or negative. So there's this series of negative trading days coming about here. So, I got a lot of ammo in the tank. I'm going to be taking pot shots here over the next 4 days. Some shorts here and there on this over the next 4 days. I'm going to take it nice and slow and easy because I like to do my swings. But if you want to get down and dirty and look at some day trades, you can use exactly the same indicator to do exactly the same thing. I mean, this was my last major swing, was buying this and taking it all the way here, literally to the peak. And then I am still in this trade. FYI, actually. I am still in this trade. It's just now in a little drawdown. Not really too concerned. Also, the yield differential, which is this bottom indicator here. This is getting quite negative. So it's kind of concerning to see price actually moving up on negative yield differentials at a high probability top. But yeah, this is just par for the course for. You got to be careful, and when you get into these trades, you got to have a plan, right? Like there are stops on these things because once you go past kind of, what is this, 135.6, what's to say you're not going to go to 136, 137? I mean, the next probable thing to occur is you go into the upper half of 137 once you start trading into this area, because these probabilities are just small. You could use weekly, you could use day to day. And on the week, wow, those yield differentials got real bearish here on the week. I mean, yeah, you could be topping out somewhere around here. You could effectively go sideways for the rest of the week at this point in time on dollar CAD. If we look at euro dollar for the week, I mean, the low is probably in. It's been holding up really, really well. I'd be surprised if the thing just came all the way down here, because if it did actually come all the way down here, the next week it's really gonna take a beating if it comes down this far into next week. But again, the European economy is not as strong as the US economy right now as far as growth goes. Oh, yo, Isaac, I see your thing. Yep. Oh, you got your desk. Cool. Cool. All right. I'll go ahead and bring up the Discord. And let's hide that. All right, cool. Now you guys can see the chart. And I can't make that any smaller. Yeah.
Hey, Joe.
Yo.
I got the desk. I got a headache, but I got the desk.
Ouch on the headache.
Yeah. Well, I only got a headache because of the process of me getting this desk. It was ridiculous.
Too
I was,
much lifting.
yeah, no, not too much lifting. It was I've been at Staples for like the last hour, and then I was trying to check out with my business. My T Rod, I have T Rod Trades LLC, so I trade under LLC prop firms and stuff.
Yeah.
But it just wasn't working. And then none of my I didn't bring any of my other cards, so I was just stuck, kind of, with no way to do anything.
Yeah, I know that feeling.
Yeah.
I know exactly what you're talking about. What card works here?
Yeah. I mean, but now it's different, as I said. It's the price of going full time, especially since I'm effectively full time currently right now. Um, it's gonna be cool to join the stream and actually like have two screens and an actual screen instead of just a small laptop to do my analysis. I've been using that little trading view on 60% so I can see all of everything.
Yeah, there's. I'll just say this on the stream. There's a little trick if you're on like a laptop or your screen is super small.
Yep.
Trading view, and
Mhm.
if your trading view looks a bit too big on the small monitor, you can minimize it, and it makes the UI a little more bearable on a smaller
Yep.
monitor.
So I got
Yep.
everything I need. As I said, I closed I'm done trading for the day, 125 basis points, and tomorrow I plan on taking on the 11 trades.
Yeah, man. And remember what I said. It was perfect timing for this Euro trade. Like
Uh, and then it bounced all the way back up. So I literally got out at the best. Like, there's no reason for me to overthink. But at this rate, also with my averages, and even though I've only took two trades with my basis points, if I'm averaging 100 basis points a day, I can pass a challenge in every week and a half, every 2 weeks.
yeah, man, a percent a day is kind of nutty if you can actually pull that off.
Yeah, I mean, I'm only pulling it off because of the leverage. Because of the leverage. If it was anything else but the leverage, I wouldn't be able to pull it off. But because I'm
Yeah.
using 1 to 100, although my basis points is still extremely small, like I'm still risking 0.3%. I'm just averaging like 4 Rs. It's just
I
it's
mean,
it's almost
people
blowing
really don't
because
believe it when it's like, oh yeah, I mean, there were a couple of 4R swings like just this week on what was it? There was some Great British Pound AUD, I think. That was the one we mentioned earlier that had the crazy swing. Oh no, it had this swing where it's probably gonna hit this likely top on the week. So yeah, there was your likely low, right, on the week. You're
Mhm.
now in the low probability zone, so the next highest probability area is up here, and that's on the week. But then you go to the month, and you're already on your way. Like
Yep.
the trade here was to go long the continuation, and this
Hmm.
was, yeah, like depending on your aggression, this easily can get to the high twos to three in the three zone.
I mean, as I said yesterday, I had a 15.75 R multiple day, and that's because of just volatility and the trades were working out. But people like you may it seems a little bit crazy to average 100 basis points a day, and that's just with two. Imagine me doing 11. Plus, it's just the fact that although there's not an 80% chance that I'll hit take profit, there's only like a 17% chance that I'll get stopped out, like every single time.
Yeah, it's super nice knowing, like, for example, when you're buying this low, just being able to pull up the probabilities here saying, oh, well, 50% of the time the low is lower than this point. And of that 50%, a chunk of it's right here. And then the next chunk of it's right there. And then same thing with the upside. Oh, what's my probability of going higher if I go short here? It's about 50% also to the upside. So those are your probabilities of like getting stopped out on a short or getting stopped out on a long. but you can very, very clearly define where you actually get stopped, which are these lower probability spots before you go to the next peak in the distribution. So you do that over and over, and then to figure out your probability of, profit, let's say on the long down here, 63% of the time, the day closes in profit. So even if the trade is making money, let's say you want to hold it till the end of the day, 63% of the time, it closes in the money. But if it goes from a likely low to a likely high, that's entirely reasonable to get out. And from here to here, you're already talking 46 pips. So that's totally reasonable for a day trade. I mentioned this to you earlier, there are guys who are, they try to overshoot, right? They try to apply what I do with my swings to a day trade scenario where it's like, oh, I'm going to look for 100 pips today. And I'm like, that's just not how you day trade at all. Like,
I'm to simplify it more by just doing a simple 1-to-1, because no matter what, I'm still winning because I just am.
Yeah.
But I'd rather target the other distribution levels because it works out.
Yeah, it's like the 20 to 50 pip range is kind of the sweet spot for a day trade.
Yeah, I mean, I'm not even. The pip number doesn't really matter because of the amount of trades I'm putting on. As I said, it's essentially 40 with the amount of day trades now. It was going to be every single day at Asia Open. I'll be putting on 44 limit orders.
Oh yeah, I don't think I mentioned that on this trade. The whole fucking limit thing. Oh my god.
Yeah.
I mean, that's gonna. I'm gonna start doing that shit too.
It's better to trade autonomously because, as I said, sometimes with the distribution levels, it'll get down to a distribution level, and before you could calculate your position size before using basis points, but sometimes it'll hit that distribution level and it'll just jump like within 15, like the next 1 minute candle is completely away from your entry. It's that just tends to end up happening.
Yeah, and no technical indicator is going to say, oh, your low should be right here and right now. I mean,
yep.
There are guys who, for example, will use, TD sequential. That's a very popular technical indicator on Wall Street, is the TD sequential. And, that was actually the first thing that I traded, is like the first system I like really, really dedicated to trade. And I traded it perfectly for day trading. And dude, it made hardly any money. It made money. But dude, did you have to fight for blood and sweat and tears for like the most marginal of gains on the fucking thing? But with this, it's like, it's just telling you where are the likely highs occurring, where are the likely lows occurring on the day for any asset you want to look at. And once you get to those spots, just check them out. And then once a day, when the new day starts, you get a new set of range probabilities. And then on that day, it's like, okay, where do most of the lows come in? Roughly around here. So maybe on this day for dollar yen, maybe the long wasn't taken, because you got a peak right here, you got a minor peak here. Yep. I guess if you're especially bullish, you could go long there. All's good. But I probably would have had a limit here and a stop there, and then maybe another limit here and a stop there. And then, hopefully this thing just rocketed down to here in the first half of the day. Then I could take it up to a likely top. But now it's either already topped out, or this thing's going to continue going up for like another 50-40 pips on USD yen on the day. Oh, crap. Lock those in place. And it looks like a whole lot of nothing, but then once you load up the range probabilities, there's your likely low, there's your likely top. Done for the day.
Yep.
Here, let's load the new version. Yep, still same exact thing. Yep. Huh. All right. Okay.
Be right back, Joe. Give me a second.
I hear you. Yep, probably no long there. Taking it up to the top here. Maybe you got a short there. Maybe. This has probably got better setup on the week. Probably down here. Oh, hell yeah. That was definitely a good buy there. And yeah, there's the shorts on the week. Shit. Those are some weekly trades. Ooh, yield differentials going white here. Either this is going to be the top for the month, or once you cross above there, you're... Yeah, I should probably set some limits to go long past that high. Up to 161. Yeah. How does the seasonality look? Looks pretty bad until you get to the end of the month. So it kind of goes down and then up. Yeah. Might not be the best time to go long, so maybe on a spike higher, there's a shot. I don't know. For you guys watching the stream, make requests, and then same thing here in the chat. You can hop on into the Discord, hang out with me and Isaac and all the other guys in the chat for the daily plan. Let's see here. Did we get any more economic data? No. No, not yet. We're getting data much later in the day now. Alrighty, you guys. It seems like much done as far as analysis. Had some bullish expectations for the month on oil, but short term, still got some bearish expectations for the day. It is insanely tight here for the day on oil. If we look at gold, I think this is like some likely low for the month on gold, if I'm not mistaken. Yep, there's your... Well, let's go ahead and check out for the month. Oh, and we should check out Apple. Yeah, so there's your likely low. And then Apple. And we're still hovering around the likely low for the month on Apple. Yeah, check that out. Right there. It's like 80% of the time your low for the month comes in above this line. And check out that bullish seasonal expected value. Yeah. What's interesting is that the timing for a lot of these risk on assets to go long is quite tentative. So over the next week, like for example on that USD CAD and now here on Apple, like over the next 4 days, we should be going sideways, seeing some chop, seeing some volatility, some spikes maybe. And then come the 14th, 15th, 16th, 17th of August, you can get some risk on. So things are tentatively risk on right now because we have to just wait and see how the rest of this week plays out. The first couple of trading days, the Monday, Tuesday of next week, how that plays out. And from there, it seems like it'll be a little easier to get some risk on going into the end of the month. Alrighty. Well, with that all said and done, I'll say thank you guys for watching and hanging out on the stream today here for the daily plan. I've been your boss, Joe Boss. Come hang out with me on the Discord. We'll go over how to use the indicators, go over some more assets, do any one-on-ones you want to do. Alrighty, you guys. Thank you for watching. See you guys in a bit.